Hey traders, it's John Fortune here with this week's Weekly Forex Forecast for the 30th of March to the 3rd of April 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, the first thing I wanted to say going into next week when looking at the dollar index and looking at all of the currency pairs as well is that we are, and we have been over the last couple of weeks, trading through a stock market crash. This has brought volatility not only into the stock markets but also into the currency markets, and this can be clearly seen in the big swings we've seen to the downside in the dollar index, then to the upside, and we had this sell-off and this kind of pullback as we're viewing it at the moment in the dollar index last week. When you have an increase in volatility like this, guys, your risk goes up, and so you have to start to manage that risk. Generally speaking, that you can do that in two ways. If you are looking at placing trades, then you should really be looking at using wider stop losses in these kind of market conditions because the moves are more volatile, the swings are larger in either direction. And you also, another good way of just reducing your risk is to take less trades. I would certainly recommend going into next week and perhaps the following week until we start to see some nice trending structure coming back into the markets and it starts to stabilize a bit. I would certainly personally be looking at taking less trades and limiting my overall exposure. So just something for you guys to think about going into next week. In terms of the structure in the US dollar, we do have this rally to the upside making new highs. This is why we have the targets up here because this is the previous momentum wave to the upside. However, something I want to show you is we do have potentially an A, B, C, D, E pattern. Okay, this is known as, you might have heard it as a megaphone or an expanding triangle. This is probably the worst pattern you can come across in Forex because it conveys extreme indecision. And when you have markets which are in a condition of extreme indecision, they are very, very choppy and trading becomes more and more difficult in these kind of conditions. So again, just to highlight, not only do we have this high volatility in the markets now, but also we have this pattern in the dollar index. So if you are trading the dollar pairs next week, the first thing we want to note is you should be looking at really trading less of them or taking your trades sparingly, not taking on too much risk in these conditions. But we also are going to go into next week without a strong bias on the dollar one way or the other because of this potential pattern setting up and because of the volatility. So we're going to be, when we go through the dollar pairs now, we're going to be looking at trading these pairs on their own merit, so that is the way they are currently structured, without a strong bias in the dollar one way or the other next week. So next market we're going to look at is crude oil. Now, last week we were looking further declines to the downside in crude oil. We did finish the week pushing towards the downside. We sold off, but pretty much we didn't go anywhere last week in crude oil. We started the week here and we corrected up and then we corrected back down pretty much just a little bit lower than where we started the week. So not much happening in crude oil last week. Well, we would like to see going into this week, we are still looking further declines to the downside. We're coming fairly close to the target set from last week at the 1945. So what we'd like to see going into next week, if we can get a pullback, any pullback in this area, and as always, if we can come back and retest broken support, turning resistance here at the 27.99. This would be a great place to start to look for bearish setups in crude oil because this would give us the best risk to reward setups down towards the target. But any pullback in this area is going to give us an option to start to look for bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 19.45. So next market we're going to look at is euro dollar. Now just remember, euro dollar is essentially the inverse of what we just looked at in the US dollar index. So again, we are seeing this expanded triangle pattern going into euro dollar. It does mean you have to be careful trading this next week. What we'd like to see is we are still focused on further moves to the downside. We're focused on short positions in euro dollar next week because despite the fact we have this choppy market, we are still making a new low here. This is a new momentum wave to the downside. So we want to be focused on primarily further declines in this direction. What we'd like to see is last week we were looking for a pullback in this market to short this pair. We have not seen any reversal patterns to the downside in this market. We're still correcting. So very simply put, going into next week, we are still looking for bearish reversal patterns in this market. Any pullback in this area is good because the deeper we can go before we reverse, if we do get that reversal, it's going to give us more potential risk to reward down towards the target, more profit potential down towards the target. So any pullback, any continued pullback in this market is going to be viewed as an opportunity to start to look for bearish setups. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.0569. So next market we're going to look at is pound dollar. Now last week we were looking for a pullback in pound dollar because we were looking for short positions in this to the downside. Similar to euro dollar, we had this pullback, but we have not had any reversal. This is still all one move to the upside. There's been no reversal patterns here, and this is what we look for. We're not just looking to go short here just because our target is to the downside. We're looking for tradable setups in this direction. We have not had that yet. However, going into this week, the further we pull back, even if there are no trades to be taken here, the further we pull back, the better, because this is giving us better profit potential down towards the target. This is giving us better risk to reward setups. So going into next week, we're still focused on bearish setups in this market. What we'd like to see is, we'd like to start to see price pulling back potentially now towards the key area of resistance at the 1.27280. And we're going to be looking next week for bearish setups in this market. And if we get the right kind of bearish setups, we're going to be looking at initiating shorts down towards the next key area of support to the downside and the target set at the 1.1034. So next market we're going to look at is US dollar Japanese yen. Now last week we highlighted the 111.540 as an area to start to look for a reversal to the downside in the US dollar Japanese yen. As you can see, we did get a nice reversal from this key area of resistance, broken support from the past, turning resistance to the 111.54. Going into this week, we are focused still on short positions in this market. If we can get a pullback, now we've reversed from here, and any pullback in this area, perhaps if we can come back and retest broken support, turning resistance once again at the 111.54, and we get this kind of double top pattern, this will be seen as an opportunity next week to look for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support, the downside and the target set at the 101.86. Now, just bear in mind, in this market, this moved down towards the next key of support at the 101.86, which we highlighted before, and we came and tagged and we bounced from this area. This is quite a big move. This is unlikely to happen in 1 week. So if you want a more conservative target just going into next week, you can look at the 10600 level, the round level here. However, overall, if this is going to continue to decline, we would be looking down to the 101.86. So next market we're going to look at is Aussie dollar. Now last week we highlighted the 0.61250 as a pullback area to look for a pullback into this area. We have pulled back now to the 0.61250. We are focused on short setups in this market as this pair is still structured to the downside, although intraday, this is the 240 charts, it's the 4-hour chart, intraday chart, the highest intraday chart, we are still moving to the upside. What we'd like to see therefore going into next week, now we've reached this key area of broken support from the past, we're going to be looking at this potentially turning resistance. We would like to see a reversal to the downside, and this is going to be a great place going into next week to start to look for bearish setups. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 0.5478. So next market we're going to look at is New Zealand dollar. Now last week we highlighted the 0.60050 as a potential pullback zone in New Zealand dollar. This now, as we've pulled back to this area, is going to be a great place going into next week to start to look for bearish setups. And we're going to be focused on short setups in this market. So if we can get bearish setups or reversal patterns in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set, the 0.5269. So next market we're going to look at is US dollar Swiss franc. Now last week we were looking for a pullback in this market, and we're looking for a pullback. We're focused primarily on bullish setups in this market as we are still structured to the upside in the US dollar Swiss franc. We did start to correct last week, and we did come back to the key area of broken resistance turning support last week. It didn't actually turn support. We started just to trade a little bit lower, so we've adjusted our key area of support this week. But going into this week, we are still looking for bullish setups in this market. We are still looking overall for a reversal to the upside. If we can come back, any pullback in this area is still going to be viewed as an opportunity to go long, and what we'd like to see is, preferably if we can come back to give us the best risk to reward towards the targets, if we can come back and retest broken resistance from the past, turning support at the 0.9340. This would be a great place going into next week to start to look for those bullish setups, and we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 0.9959. So next market we're going to look at is US dollar CAD. Now last week we highlighted the 1.3990 as a pullback zone in the US dollar CAD. We did pull back to this area and we did test it last week, and we're sitting now right at the 1.3990. So very simply put, going into next week, this is now a great place to start to look for bullish setups, and we're going to be looking at initiating longs up towards the next key area of resistance, the upside and the target set at the 1.4688, and if we can get a break through here, we're going to be looking up towards the next key area of resistance, the upside and target 2 at the 1.4947. And last but not least, we have gold. Now, last week we traded straight through the key area of support, looking to turn resistance to 1.57530, which was about here. And we traded straight through this. We are still overall structured to the downside, though, in gold. And this is just a reflection of the volatile markets, big swings to the downside, to the upside. So we've had to adjust our key area of resistance up to the 1652.88, but we are still primarily focused on moves to the downside in this market. We're coming very close now to the previous key area of broken support from the past, looking now to turn resistance at the 1652.88. Any pullback we have here is going to be viewed next week as an opportunity to start to look for bearish setups, and we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set at the 1445.80. So that is it for me for this week, guys. Again, going into next week, just bear in mind the market conditions that we actually currently have because of this crash in the stock market. The markets are volatile, the markets are choppy, and the markets therefore are more risky. They come with more risk in trading these conditions. Seek to mitigate those risks by, first of all, using wider stop losses when you trade, and secondly, also just bear in mind that you can reduce the number of trades you take. This is not really the time in the data set or the calendar to start taking huge numbers of trades, because these are not the best market conditions right now. So you want to be looking to limit your trades during poor market conditions and start to increase your exposure or increase your risk and the number of trades you take, for example, when conditions are better. So just bear that in mind going into next week. I want to wish you all the best for next week, and I want to say thank you to everybody who comments on the channel on a regular basis, and also a thank you to everyone who has subscribed to the channel so far. Have a fantastic weekend, have a great week next week, and again, don't forget to trade safely when you're trading these markets next week.